What's up guys, Donnie here. Today we're going to talk about Tesla and the upcoming inclusion in the S&P 500 on December 21st. We're going to talk about what we know, what we think will happen, and what I'm going to do about it. Quick reminder, I am not a financial advisor, so please do your own research. I'm just a guy on YouTube sharing my perspective. Without out of the way, let's get started. So quick background, the S&P 500 is short for Standard & Poor 500. It's basically an index that measures the stocks of 500 of the largest United States companies. There is very strict guidelines to be added into this list, including 4 quarters of being profitable. This is one of the main reasons why Tesla has not been on this list yet, because they have not been profitable for 4 quarters in a row until this year. So this is a unique situation because Tesla is such a big company, it's such high valuation. They're almost $600 billion, okay? That means that when they're added into the S&P 500, they're going to have, I think, 1.5% weight of the whole list because they're in the top 10 largest companies in the S&P 500. And this is the first time this has happened because they spent so much time growing and not being profitable. And then all of a sudden this year they skyrocketed 700% to the valuation they are now. This is a unique opportunity for, and a unique situation in general that such a big company is being added to the S&P 500. This is different from other companies that were added with very large caps because those ones were in different lists before that were also managed by S&P. So instead of being bumped up to the next grade like these other big companies, this is like being added straight from the bottom all the way to the top. So this situation presents unique opportunities. First of all, this means that the ETFs and index funds that track the S&P 500, like VOO and SPY, I talk about that all the time in my other videos, they have to add that 1.5% pie of Tesla into their portfolio. That means that they're going to be buying a lot of shares of Tesla. This is mandatory for these ETFs, these index funds, because they track the S&P 500. That means they stay as close to the S&P 500 list as possible. Okay, if they don't do that, they risk drifting away from the S&P 500, and that basically makes them useless. You know, that's the point of the ETF, the index fund. So I believe they need to add 130 billion shares between all of the ETFs and index funds. That's a lot, obviously. These ETFs, they don't care about the price, okay? All they need to do is make sure that they have the right amount of Tesla shares in their portfolio so that the people buying these ETFs are properly going into the S&P 500 list. That's what they're investing into. Now, to get as close as possible to this, their best window to add these shares is between December 16 and 18. This is just the 3 trading days right before the inclusion, which is December 21st. They could add it afterwards, but I believe this is the best time for them to add it, to stay as flush, as square with the S&P 500 as possible. Now, another point is that there are other ETFs and index funds that use the S&P 500 as a benchmark. So they're always trying to one-up the S&P 500 because that's what everyone uses as a benchmark, right? So they have a choice. They don't have to add Tesla into their pie, but they risk they risk straying too far, possibly getting behind the S&P 500. So if they don't add Tesla, it's a big risk for them. They are most likely going to add it because if you don't add Tesla, then you're basically saying you don't believe in the company and you think that Tesla is not going to grow as well as the rest of the S&P 500. Now, that is a very risky position to take because if you ask anybody who's in the know, EVs are the future, autonomous vehicles are the future, and all of the Tesla's businesses are on the upswing. They're all growing exponentially year by year in the next decade. There's price targets of 40,000 per share, which is on the bullish side, obviously. But I've looked at some of the valuations, and it sounds like it's very possible. This is why Tesla is also my biggest holding in my portfolio. So, a little basics. Generally, shares go up in price when there's a lot of demand, and shares go down in price when there's more people selling than buying, right? So what do you think would happen when these ETFs have to buy 130 billion shares before December 21st? And this is usually in a 3-day window, right? Now, obviously, everyone also knows about this unique opportunity. Everyone knows the price is going to go up. We just don't know how much, and we don't know for how long. We know that the day of inclusion is going to be the 21st of December. And everyone everyone in the stock market for a living knows this. Okay, so what does that mean? They're probably buying right now, which is part of the reason that the price is going up so high. Right now it's at $640 per share. And we just don't know how many of those buyers are speculators, people who are trying to make a quick profit by getting in before the price runs up like crazy and then trying to sell it at the peak. So this is the dilemma that we face. We don't know how many people are trying to sell to the indexers that have to buy, and we also don't know if how many people are long-term investors like me, where we're going to keep it no matter how high and no matter how low it goes, because we believe in this company and we believe that it's going to go high in the next 5, 10, 15, 20 years. So we're going to keep it because we know that it's going to skyrocket. We're not here for the short-term gains like the speculators who are going to be selling it after S&P inclusion. So this also gives us the knowledge that it's going to go down after S&P inclusion. We don't know how much, but we know that there's a lot of people buying this for the short-term gains. So there is going to be a dip. We just don't know how low it's going to get. So for all we know, it's going to go up to $700, $800, maybe $1,000. Some people are saying $1,000 by December 21st. And then after that, it's going to start sliding down, maybe slowly, maybe quickly. Who knows how much though? Some people are saying as low as $400, but you don't know. You never know. There's some companies that we could compare it to. One of them would be Yahoo. Let me see if I can find the inclusion graph for that. So Yahoo, while not as big as Tesla, obviously when it was added into the S&P 500, it has very similar. It has a lot of similarities to what's happened to it right before inclusion, right? So if you look at this graph here, this was when it was announced. This is on Gary Black's Twitter account. I highly suggest following him. He's very smart in regards to Tesla. So they were announced to be included on this date, November 30th of 1999, right? So you have this major run up until inclusion day here, okay? And now if you look at the Tesla stock, it's the same thing, November 16th of this year. And there's this big run up all the way to today, which is December 15th, December 16th, if you're watching this the day I publish it. It's probably going to go up a little more too. So when the day comes, obviously this is the peak where everyone's waiting to sell the stock. You see this sharp decline, but look how small it is, right? A lot of people are expecting the decline for Tesla over here. Okay, this is $300, $400. Some people are expecting it to go all the way down to the bottom here. That would be the same as if you would expect Yahoo to dip all the way down to the 200s again. But it only went down, what, $20? So we don't really know what's going to happen because there's actually a lot of catalysts after the inclusion which would drive the price of Tesla up again. Let me see if I can find my list here. That would include full self-driving, the wide release. Elon Musk has stated numerous times that he wants to widen the release of the beta by the end of the year, possibly release it completely by the end of the year. Now this may be Elon time where his expectations versus reality is pretty crazy, but it's very possible. There's also the fourth quarter volumes and earnings. I believe there was a lofty expectation of selling 500,000 vehicles this year. Because of the pandemic, the factory was closed for a while. Now they might actually reach this target number because of the sales of the Model 3 and the Model Y. There's also the Made in China Model Y starting, Cybertruck news next year, and then the possibility of an inaugural address by the Democrat Party, Biden, because he's very pro electric vehicle, right? So that there's rumors that he's gonna return the $7,500 incentive, rebate incentive, and he would remove the company, the limit for the company. So new Tesla owners would actually get this whole amount now. Let's see. Right now it's zero because they met the quota for the incentive. So there's a lot of possibility of this same thing happening. It would just keep going up until the end of the year and, skyrocketing after that. Now, we're going to avoid the rest of what happens to Yahoo after this because it's like downhill. Yahoo is the shadow of its former self. But anyway, this run-up is going to be very similar to what we've seen so far and what we're expecting to see. We don't know if this dip after the inclusion is going to go all the way down or stay relatively small. So what are we going to do about this situation, okay? So here's what I'm going to do. My position in Tesla is secure, okay? It's the largest position I have in my stock portfolio. I have been trickling in on it on red days. Even on green days, I do like fraction shares just to dollar cost average and to keep my position higher, because the fact is I am a long-term Tesla investor. I believe in the company, and when you look at it in 5, 10, 15 years, the difference between $400 and $600 here is like the difference between buying Amazon when it was $150 and $200. Right now, Amazon is at $3,000. So it's not that much, guys, because there's so much more growth in the coming 10, 15 years, 5, 10, 15 years for Tesla that this amount really doesn't matter. So if you don't have any Tesla position, I would say just jump in, okay? Again, I'm not a financial advisor. This is just my perspective. Tesla has so much growth ahead of it, so much upside that it's a no-brainer, really. It doesn't stop trying to time the market and just get in. If you don't have any position with Tesla, just go ahead and get in, okay? So if it dips down a lot, I am buying a lot. If it dips down just a little, I'm still buying. The fact is, I have a lot of money cash in reserve, specifically for the purpose of using it to dump into Tesla after S&P inclusion. I expect it to go down to at least $600. Just because of high valuation, and I think there's going to be a lot of speculators trying to get in a quick buck to sell it to the indexers. But honestly, if it goes down all the way to $400, I may have to actually start using margin, which is basically borrowing money to use in the stock market, and just pour it all in there and then pay it off as soon as I could. Margin is very, very dangerous. I suggest not using it if you're a first-time investor. And if you do decide to, make sure it's not the biggest part of your position, okay? I would say keep it at 30%, maybe even 10% of your position. But let me know what you guys think. Do you think there's going to be a really big dip after the S&P inclusion? Do you think it's going to kind of hover in the same level until it goes up again from the next catalyst? Let me know in the comments below. If you found this video helpful, share it with someone who you think will also find it helpful. It'll really help the channel, build the channel up. It'll help me as well. Don't forget to tap that like button, tap that subscribe button, and tap that notification bell. It'll really help us a lot again. Don't forget to check down the links below as well. Robinhood will give you 1 free stock when you sign up. Webull will give you 4 free stocks up to $1,600 when you sign up and deposit $100 in the account. And M1 Finance will give you $10 credit when you deposit $100 into the account. Thank you so much for watching this video, guys, and we will see you next time. Bye-bye.